What is a blockchain? The blockchain is a public distributed ledger that keeps permanent record of all the transactions that has taken place in a chronological order, offering transparency and immutability. Now let's break down this definition into its individual elements. First, a blockchain is a ledger. This means that it is like a book or a file that keeps record of all the transactions. Chronology here means that it is arranged in order that transactions happen or come to be. By transparency, it means that transactions are able to be seen or opened. Then, by immutability, it keeps track of transactions permanently. In other words, once a transaction goes in, it can't be changed. So the blockchain is a technological advancement unlike anything seen before. What is Bitcoin? A Bitcoin is a type of digital asset that can be purchased, sold, or transferred between parties securely over the internet. Also, Bitcoin is a form of digital currency and it can be used to buy products, services, and a means of exchanging values electronically. Bitcoin or BTC, as it is sometimes known, is different from other types of traditional currencies such as dollars, euros. There are no physical coins or paper for Bitcoin, and because of this, using Bitcoin does not require a bank or credit card or any third party to process your payment. Instead, Bitcoin is sent or exchanged between parties directly over the internet in a secure way. When transfers are made in the Bitcoin ecosystem, there is need to be able to verify that both parties have done the needful for a retransfer. As a matter of fact, there were attempts to create a sustainable digital currency, but all those attempts failed because one major issue with sending digital money over the internet is that transaction can be copied and spent twice. This issue is commonly known as the double spend problem, and why we need the bank or other institution to act as intermediary in these types of transactions. And without an intermediary or agent, it will be difficult to determine if the transaction is real or not. So, since digital money presents such a problem of double spending, and Bitcoin is a digital money, how is it that you can send Bitcoin to someone else over the internet without a bank or other intermediaries to certify that a transfer took place? The answer lies in a global network of thousands of computers called the Bitcoin network, and a special type of decentralized ledger technology called blockchain. So the blockchain manages the double spending by implementing a confirmation mechanism. The blockchain technology uses math and cryptography to protect and store data across network of computers. By decentralized means it is not regulated by central bank, and this makes it more secure and less prone to fraud. Bitcoin miners are a group of people within the Bitcoin network. They process and confirm transactions. Anybody can apply to become a miner. However, it is resource intensive and difficult, especially over the past few years. These miners uses a very powerful computer designed to mine Bitcoins, and the way they do this is by solving and resolving mathematical equations and cryptographic problems, because every one of these transactions need to be encoded cryptographically. Bitcoins are not created or issued by the central bank, but they are generated through solving mathematical equations. As this is done by miners, the miners are rewarded or paid in Bitcoin, and this is one of the key components of Bitcoin creation. So the role of a miner is to generate the blockchain of records that form the ledger, Bitcoin. Each block contains every transactions that has taken place. New blocks are added every 10 minutes as new Bitcoin transactions take place. Unlike traditional fiat currencies, and what I mean by fiat currencies are like the US dollars, euros, and other countries' currency, in which the governments around the world can simply print more bills whenever they want. Bitcoin has a limited supply of coins, and that limit is set at 21 million and will not be reached until 2140. As these miners are processing different transactions, they build a block, and when a block is verified, it gets added to the blockchain, and all the blocks that form the blockchain is built all the way back to the initial transaction in Bitcoin, known as the Genesis block. In 2008, there was a financial crisis. People from all over the world felt a debilitating economic effect. As this global financial system teetered on the point of collapse, many central banks engaged in quantitative easing. So, in the middle of all of this crisis, there was a white paper published on October 31st, 2008 by Satoshi Nakamoto, titled Bitcoin, a Peer-to-Peer Electronic Cash System. As a matter of fact, Satoshi Nakamoto states in the white paper, a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. When Satoshi Nakamoto came up with the idea of Bitcoin, one key factor was decentralization. Decentralization means we are all part of the Bitcoin ecosystem. Instead of relying on the government, bank, or middleman, Bitcoin belongs to everyone. The Bitcoin price is determined by its users under the principle of supply and demand. The Bitcoin supply is limited to 21 million in total, to be reached by 2140. However, the story might change as Bitcoin continues to mature. So the more people embrace Bitcoin, use it as a payment by buying products and services with Bitcoin, or offer it as an exchange for products and services, the better it works. There are common misconceptions about blockchain and Bitcoin. These are little things that people misunderstand about blockchain and Bitcoin. The first misconception people think of Bitcoin is that it is anonymous. Now I want to say that Bitcoin is not anonymous. Bitcoin is actually pseudonymous, and this is because when you are in the Bitcoin network, your Bitcoin address is your identity, and every transaction done on the Bitcoin network keeps a permanent record on the open blockchain. So whenever you move money using your Bitcoin address, anyone can access that information, and your information is collected through the KYC process, which stands for Know Your Customer, with a Bitcoin exchange company. And without KYC, you may not be able to exchange your fiat currency with Bitcoin. In a nutshell, your KYC identity always matches your Bitcoin address. That's why you're pseudonymous, not anonymous. Next, transaction is reversible. This is not always the case. As I said earlier, blockchain is a type of ledger or database which keeps a permanent record in a chronological order. In other words, it is immutable. So when you carry out a transaction, you cannot go back and make any reversals like bank does. So every transaction on the blockchain is permanent and immutable. Another misconception is that People think that blockchain is Bitcoin. This is not correct. Blockchain has extended above Bitcoin. So blockchain is one of the technologies being used in Bitcoin. Blockchain is also used in other fields such as supply chain management and in real estate. So blockchain is not Bitcoin. Finally, people think that you need to buy full Bitcoin in order to get started with Bitcoin. This is not true, and as you will learn later in this course, you will understand that you don't need to buy a full Bitcoin in order to get started or start Bitcoin trading. Bitcoins are divisible. So these are some of the most common misconceptions about blockchain and Bitcoin. Before now, we have covered a lot about the fundamentals of Bitcoin and blockchain. So in this lecture, I will show you how you can get started in using Bitcoin. I'm assuming that you don't have any prior experience with Bitcoin at all. To get started with Bitcoin, the first thing you need is a Bitcoin wallet. This is a type of software that you install on your mobile device or on your computer or even through a web platform. And this will allow you to create your own addresses. An address in Bitcoin is similar to an email, and this Bitcoin address is what you use to receive Bitcoin. Once you have your wallet opened, you're going to receive two valuable pieces of information, a public key and a private key. The public key can be shared with anyone, but the private key is the key that only you know. Once you have your wallet, the next thing is how to obtain or get Bitcoins. Although you can do so using several methods. You can obtain or get Bitcoin by doing a job or getting paid. But the most obvious choice is to buy Bitcoin. That would mean you could exchange with dollars or whatever currency. So where do you go when trying to buy Bitcoin in exchange for physical money? We go to platforms called exchanges. Bitcoin exchanges your local currency for Bitcoins as well as Bitcoins for local currency or physical money. Trading cryptocurrency like Bitcoin is all about buying and selling Bitcoins using different fiat currencies or altcoins. There are good exchanges out there, but when it comes to choosing an exchange, you need to consider your geographical location and the type of fiat currency you use. The first one I want to point out is www.coinbase.com. The Coinbase platform allows you to trade cryptocurrencies such as Bitcoin, Bitcoin Cash, Ethereum, Litecoin, and Ethereum Classic. Coinbase has a lot of cool features. They also have a mobile app so you can stay on top of the market. As at the time of making this course, they have over 20 million customers in 32 countries, and they've carried out more than $150 billion of currency exchange. Anyone can create an account with this exchange without having to buy Bitcoin beforehand. So when you sign up for a user account by providing basic information, once you've activated your account and gone through the registration process, then you should be able to sign into the Coinbase using your email or password. And sometimes you may be asked to enter a verification code sent to your mobile phone for security reasons. And here we have our dashboard. Note, once you have your account being set up, a wallet is assigned to that account also, so you can start receiving, sending, and storing your Bitcoin. Coinbase also allow you to set up your local bank account so you could make withdrawal to your bank account. It's very important you choose a Bitcoin exchange that supports your currency. The next exchange is Luno. Luno is one of my favorite exchange. Luno has most of the features offered by Coinbase. Luno makes it easy to trade with Bitcoin and Ethereum by also offering a mobile app and a price chart for trading analysis. So to get started with Luno, there are 3 basic steps. You sign up, you deposit money using your credit card or transfer into your wallet. Then you start trading with Bitcoin or Ethereum. Another great option I want to show you is local Bitcoins. Local Bitcoins is more of peer-to-peer exchange platform, unlike Coinbase and Luno. Peer-to-peer means that you have data related to the person you are interacting with. In other words, it matches buyers and sellers without holding any fund during the trade. It also depends on the kind of trading experience you prefer. Peer-to-peer trading, like local Bitcoins, may be more suitable for your need than a regular exchange like Luno and Coinbase. This is because peer-to-peer trade do not require you to provide any document regarding your identity. In local Bitcoins, you're dealing with other traders directly. So it is important to know a little bit about traders' previous history or feedback before going into transaction with them. Another peer-to-peer trading platform is BitMEX. All you need to do is register, deposit, and start trading. Apart from using the cryptocurrency exchange, another alternative to convert your Bitcoin to fiat currency is to use a Bitcoin debit card. This can be topped up with Bitcoin or linked to an existing Bitcoin wallet, which allows you to spend digital currency wherever major credit cards are accepted. For instance, Coinbase offers a Visa Bitcoin debit card, and you can actually be paying anywhere Visa is accepted using your Bitcoin debit card. You can also go to an ATM and you can actually withdraw funds in your local fiat currency against your Bitcoin. Another option to convert your Bitcoin into a fiat currency is to sell it to someone else. This is a way of transferring or sending Bitcoin to a person without involving a third party, such as a bank or a credit card. All you need to do is to find someone who wants to buy Bitcoin, and you can process a transfer directly into his wallet, and you get paid in your local currency. Note, in this type of business, there are some security risks involved, because when you effect a transfer of Bitcoin to someone, that transfer or transaction is irreversible. In other words, if you send your Bitcoin to someone else and the person does not pay you for the Bitcoins, you have no way to retrieve your Bitcoins unless that person voluntarily sent it back. So, whenever you're doing this type of business, make sure the person can be trusted. or you can use what is known as a local trading site like localbitcoins.com, and it's available in over 200 countries. Local Bitcoins allows you to put your Bitcoins for sale on their site, and they provide an escrow service, and this service simply locks your Bitcoin inside the platform, and the buyer will be able to pay you for those Bitcoins. The platform takes care of releasing the Bitcoins upon successful payment. So at the end of the day, the Bitcoin goes to the buyer, and the buyer actually pays to the seller. In this lecture, you are going to learn how Bitcoin can be sent and received. Here we have Mike and John. John wants to send 2 Bitcoins, also known as 2 BTC, to Mike. John is sending these Bitcoins. Maybe he bought a product or he's paying Mike for a service. In order for John to send 2 Bitcoins, he needs to have at least 2 Bitcoins in his wallet. Now, the question is, how can Mike receive his 2 Bitcoins from John? So, in order for Mike to receive 2 Bitcoins, he also needs to have wallet of his own and needs to provide him with his Bitcoin address. He can share his Bitcoin address with whomever he wants, because that Bitcoin address is simply for receiving money. Bitcoin address is a hashed version of a public key which was assigned when he opened up his account. Note, they both have different and unique private keys that will still allow them to spend their Bitcoins anytime, and these keys are kept secret.